Paul, with the gyrations that we see in the Midwest of the United States, in Texas, Permian Basin, et cetera, can we get out of the assumption of range-bound oil?
Well, look, these are not gyrations. I mean, this situation to me is very reminiscent of Hurricane Katrina, where, if you recall, on the Monday after Katrina, there was sort of an attitude that this hasn't been that big a deal, and then over the course of the following week, it suddenly, emerged as a horrendous disaster. So gyrations, and this I've observed this morning, Tom, people don't realize how bad the situation is. I mean, you've got, like, as you mentioned, your previous guest mentioned, you've got basically full-scale blackouts in Mexico, but you've also lost here the biggest outage in the history of U.S. oil and gas. I mean, this thing is, we have never seen a loss of this scale at a time when, you're in midwinter. So basically, we think you've lost about 3 million barrels a day of oil. We think you've lost about 10 BCF of gas at least, and we're down at least 3 million barrels a day in refining. All of these, for example, in refining, at the base of about 16 million barrels a day, with inventories not that high. So this is an energy crisis. And, gyrations, you're seeing Brent at 64 here. The obvious price reaction would be, firstly, obviously, if you lose U.S. Texas oil, you'd be expecting Brent to go up, and it is. And
what is your price target? I mean, give us visibility on price right now.
Well, we've been talking a lot about the dollar, so we think you can get to 80 this year based on the dollar. Now, that obviously, if the dollar strengthens a lot, that causes a dud. But essentially, oil should be around 65, 70 just on the dollar, at 90 on the DXY. If we break down to 80 and below, then you could easily see oil at 80. Therefore, there's quite a bit of upside at this point, that was prior to this outage. So, we'll see how this thing plays out. But I think it's going to take a long time to sort this problem out.